Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, overnight the US dollar index gained significant momentum as it breaks through that level of 92.30.40 and now looks towards the next target of 93.40.60. What initially triggered the advance was that the announcement this morning that Trump's reformed tax plan could be released now on September the 25th. So this in terms has given significant strength to the US dollar case and now breaking through this downtrend at 92.30.40 and rebounding from the multi-year lows around 91 now gives further scope to the upside. So moving on to the euro, the downside case has come evidently clearer now that we've broken through that support of 119.10 and now exposed the next target of 118.40 down to that uptrend of 117.60.80 and reassess from there. Be a little bit cautious if you are trading short, purely for the fact is that we could see bids start forming in front of that level of 117.60. Now, tonight we have the US CPI, and of course the Fed has been keeping a very close watch on the inflationary figures, and if we could see a slight improvement, at the moment the forecast is at 0.3, previous was at 0.1. So if we do see an improvement, this could actually start stirring up conversations that the last rate hike for this year, being the third, could be coming sooner than December. So let's hope and see how it turns out, that the market can actually start looking closer to these views. Towards the top side, resistance comes in at 119.20.25 and firm above at 119.80.90. The Australian dollar lost ground after failing to sustain renewed gains up towards that resistance of 80.60. And with the downside target being breached at 80 cents, brings a low of 79.70 this morning. With further evidence from the technical implications that the market is breaking down, I do expect to see the target challenged at 79.50. Now today we do have a couple of key numbers coming out from Australia and China. Today we have the release of the unemployment. Seasonally adjusted employment did increase last month of 27,900. However, that was slightly disappointed due to the fact that most of it was part-time jobs at 48,200. Today's forecast comes in at 17,500 with the unemployment rate seen at 5.6. Now from China, it is to release its industrial production, which is forecast at 6.6, its fixed assets investments, which is at 8.2, and along with retail sales forecast at 10.5%. Now all this data can actually shake up the Australian dollar and could inspire some sharp moves. I expect to see it from the bear side, purely from the fact is that the technical implications are breaking down. With any advances, look towards 80.20 as a potential short trade. The dollar yen case, I'm a little bit cautious of coming out with any bullish calls at this level. Even though the US was firmer overnight, the market didn't actually take on any renewed gains beyond 110.65. With still at the moment concerns coming out of North Korea with the US, the market will be very wary, and if any new news spooks the market, we could easily see a pullback towards 109.75. However, a break above 65 as we challenge it now would give further scope to maybe to 111.45.55, but do be a little bit cautious if you're long, because a sharp turnaround can easily emerge. And as you can see over this pattern, going back over the last couple of months, the sharp downturns have come very, very quickly and continued on, as you can see. So do be a little bit cautious and be on your guard if you are trading from a long side. Earlier in the week, the pound posted strong gains on Tuesday with this CPI coming out slightly upbeat. However, overnight, the market slightly reversed on the back of unemployment rate, which was marked up a pip from 4.4 to 4.3. Also weighing on the pound was the average earnings, which missed its forecast of 2.3 and came in at analysed number at 2.1. Now, of course, with the slightly stronger CPI, the market will be talking about rate hikes, so do be a little bit cautious. If we fail to get a break beneath 131.80, then we could easily see a rebound back towards 132.50 to 133.20. Now, that being said, if we get a break beneath 131, this would negate any bullish implications and actually look back towards 130.60 as a target. The gold is now challenging this trend line at 1,320. A break beneath there would give further scope to the downside and bring in a target of 1,314 to 1,308. Now, do be a little bit cautious. I believe the bids are starting to form up around 1,308, and we could get a strong rebound back towards 29 to 36.42. So for trading from a short side, I believe this is just a clean out of longs, and the market would eventually see a rebound from that level around 13.08. And to wrap up with oil and silver is the fact that the oil is now closer to its target of $50 a barrel, and I'm calling for an extension to $52 a barrel before any turnaround. So do take note of that, with the support coming in at 49.10. And with silver, it's just taking on the challenge of this uptrend, which comes in at $17.60. Now, although the market is coming back into a negative phase, I feel the market will fall towards $17 2025 and reassess from there. It's inevitable from this technical point is the fact that it is still heavy, and if gold, as it's breaking now through 20, could actually see silver follow suit. So that wraps up my daily video. Thank you very much for joining me today, and I hope you have a wonderful day that's ahead of you.